what I wanted to do today is just kind of let people know what's going on in the real estate market today, right? Because these last few months have been a little funny, right? With coming off of the holidays, coming off of the election, all these things happening in the news and all that stuff.
Yeah, with interest rates, everything's
but how
kind of
did
changing.
that actually affect the real estate market, right? And what's happening today, right? Let's separate what you hear on the news, but these are the real facts, right? So let's kick it off. Like, what's your thoughts on these last few months? Like,
what I'm looking at, Enrique, is for us to really look at our market, right? Because like you mentioned something like the news. The news is talking about, pretty much the whole country. And what I like to look at is really looking at, right now, obviously we're looking at Santa Clara County. And I think that's important for us to understand is that the news says one thing about, the whole country. And then when whatever market you're in, you really want to get information and details about that specific market, right? And get a really good pulse on that market.
Yeah.
Right. So that's the first thing that I like to look at is because, obviously our market is highly competitive, highly desirable. And so it's exciting when you really break it down. And what I actually like to do for my clients is, when they're looking at a specific, let's say Santa Clara County, but we even go even deeper, more detail of what zip code are you looking in, what area, so that we can look at the stats on that specific area.
Yeah, because every little pocket, every little neighborhood, right, is gonna be a little bit different. Every city within the county, right?
Exactly.
You're buying in Cupertino, that's gonna look different from some parts of San Jose or Milpitas or Santa Clara, right?
Yeah.
And so I think that's good that you brought that up, because if you do want stats on your specific neighborhood or a specific city, that's where it's best to get in touch with the real estate professional, so they could break that stuff down for you, right?
And then you can see the market trends, see where the market's going, how competitive it is in that specific area.
Got it. Okay, so right now we're talking about kind of Santa Clara County in general, which is where we're based out of. We service a little bit of the Alameda County, San Mateo County as well, but Santa Clara County is probably our hub, right? So the last 3 months, right, at least coming from the perspective of our team, I feel like things have started to pick up.
Yes,
right?
Absolutely.
Anytime we go to the holidays, it seems like things kind of slow down a little bit because people are distracted.
And especially because of the election, right? Everybody wants to hold off until after the election. So, right. So, that's important to understand.
And then, there was some of that uncertainty of like, well, what's going to happen? What's Trump going to do? Right. And as we saw, he's getting the business right away. So I think some people kind of are getting a little scared of that. But nonetheless, people are still buying and selling.
Yes.
Right. And that's the thing is, no matter what's happening in the market or in the news, if it's the right time for someone to buy or sell, we're still seeing that happen because we've sold homes in December. We sold a lot of homes in January, February, and now we're in March, and we have a lot of things happening today. Right. So I always like to look at the inventory, right? Where was inventory at? So I printed out a little bit of stats here. And these are active number of homes of homes that are on the market.
In Santa Clara
County, single family, townhouse, and condo.
Okay.
Right? Because that's what people are looking at. December, 853 total.
That were active.
That's how many homes were on the market in December.
Okay.
Then January, it went up to 1135 in the month of January, right? Yeah. So it starts to, pick up. People are off the holidays and now starting
putting
to
their stuff on the market.
Putting their stuff on the market.
Yeah.
February, 1464.
Okay.
So we're seeing it climb up, right? And we traditionally see as we enter the springtime is when people start wanting to put their homes on the market, spring and summer, right? As of today, we're mid-March, right? 1847.
Wow, okay. So basically from December to mid-March, we've got 1,000 new homes, right?
1,000 more homes on the market,
okay.
Right?
To compare December to now.
Exactly.
Okay.
And so that kind of shows you the trend, right? It's like the number of homes for sale is going up, as it should during this season.
Yeah, we definitely see it like that. Is that we definitely, because of seasonality, we definitely see that more people are looking to put their house on the market during this time.
Exactly. Right. Now, here's the other part of that you got to pay attention to is how many homes are actually selling.
Okay.
Because that kind of tells you the supply and the demand, right? So in December, although we only had 850 homes for sale approximately, there was about 846 that sold.
Wow, okay.
So
when it hit the market, it was gone.
Yeah, so the number of homes for sale, the same amount kind of sold in that month. So that was pretty much like 1 month worth of inventory.
Wow, okay.
January, 1135 homes for sale, 563 sales.
Wow, that's a
so
big
there was not as many sales in January, and there was a lot more inventory. And we saw that, right? Some homes sitting on the market,
Yeah.
Right.
And what I'm thinking, that's because of the election. I'm thinking
so.
That's because of the election. People kind of pulled back and wanted to hold off to see what was coming for the new year.
Exactly.
Right.
Exactly.
Because we were getting a lot of that when I was talking to a lot of clients in regards to the finance side and talking to some of the agents. A lot of people just kind of wanted to put it on hold.
Yep.
Right?
They want to put things on hold. Right. February 700 sales, 702. Right. So about 1,500 homes for sale, 700 sold that month, right?
Okay.
So a little about 2 months worth of inventory.
Yeah.
And we saw that, right? We've seen some homes that, sat on the market a little bit, some homes that reduced their price, some homes that pulled their homes off the market, right? Now in March, right, 1847-ish number of homes for sale. There's been about 700 sales so far.
Okay.
So I think we're going to end March probably with
very close to
1,000.
That's what I'm thinking. Yeah, because
1,000 homes
we have
sold.
Another 10 more days.
Yeah, 1,000 homes sold in March compared to 1,800 homes, right? So there's still more than 1 month worth of inventory, right? And so I think what does that mean for buyers and sellers?
There you go.
Right?
That's what I'm looking for.
What does that mean for if you're a buyer? What does that mean, right? That means there's more to choose from right now.
Yeah. And again, by us breaking down these stats, if you're comparing December, right? Anything that was on the market in December, it's pretty much sold. Mm-hmm. Now we're coming into, like you said, March, where we're like, hey, listen, we have about, what'd you say, about 17 or 1,800
homes
right now. And we're looking probably to end up selling about 1,000.
1,000 homes sold.
So yeah, when I look at that, where's the opportunity?
Yeah.
And I feel that there's opportunity for buyers right now.
Yeah.
Right?
There's definitely opportunity for buyers, right? Because when there's more supply than there is demand, the homes aren't getting as many offers, right? Now, if it's a hot home, if it's a really nice home, if it's in a really good neighborhood where like the schools are really good or a really desirable area, those homes are still getting a lot of offers, but maybe not as many as like maybe during some of the peak times, right?
And I think that's the thing we have to really understand, Enrique, is that yes, the stat is different from December to March. But in reality, it's still a hot market for sellers as well, right? It doesn't mean it's a buyer's market.
It's exactly.
Right? So I want to make that clear. It's not a buyer's market. It's just there's a little relief for some buyers, I would say.
Exactly. And 1 to 2 months worth of inventory, that means if no new homes came for sale, everything would be gone in 1 to 2 months, right? So it's still definitely a seller's market. There's less supply than there is demand, right? Yeah. And if you think about it, new buyers come into the market every single day.
Yeah.
Someone turns 35 years old, right?
Yeah.
Or gets their job, their promotion, or gets married, or has a kid,
or their stock,
right, goes up, and they want to cash out and put that towards a home. So new buyers are always coming in, but what we're seeing is, sellers, that there's not as many, right? There's not as many sellers. So that's kind of
let me ask you. So knowing that right now, right? Yeah. So because a lot of times people always ask this question, right? They ask the question of, is it a good time to buy, right? And obviously, we have the way we answer that question of, obviously if you can afford it, if you're comfortable with the monthly payment, you can see yourself being here for the next 5 years, it makes sense to purchase sooner than later. But I guess my question to you, Enrique, is in this market, what advice would you give a buyer that's saying, hey, listen, is it a good time to buy right now?
Yeah.
Right? Based on the stats.
Based on the stats, I think it's a better time to buy now than it was a few years ago.
Yeah.
When we had less than 1 month worth of inventory. If we looked at a few years back when the rates were a lot lower, we had 1,000 homes for sale and all 1,000 were selling every single month, right?
Like what we had in December.
But that was constant.
Yeah,
right?
Throughout, yeah.
And so right now, I think you have a little bit more to choose from. I think you have a little bit more negotiating power.
Yeah.
I think what we're seeing is that sellers have come around to the fact that they have to wiggle a little bit to make the deal work.
Yeah.
Right? Because if your home's sitting on the market a little bit, you either got to pull your price down or you got to offer some incentives to the buyer, which we're seeing in the form of credits towards closing costs or rate buy downs and stuff like that. So I think it's a great time for buyers to buy right now. And of course, you got to make sure, your long-term plans.
Yeah, you're financially set.
You got the money, you can afford the payment, and you plan to be in the home for several years.
Absolutely.
Right?
Absolutely.
Because if you're trying to just hey, I'm buying and I'm going to sell in a couple of years, you might lose a little bit of money, right? Or you might after fees and commissions and all that, right?
After reselling fees, yeah. My other question would be, because the big question that's out there because of the new law with the buyer broker agreement.
Yeah.
How is this, what are we seeing with the buyer broker agreement? Are we, I mean, I know, but I'm asking you to kind of elaborate.
That's actually a good question, right? Because late last year, right, August
17th, I believe.
August 17th is when that new law came in, or the new rules, basically, where the commissions were now separated, right, between the buyer and the seller, right?
Yeah.
And so you had to have a commission set with your seller, and the buyer had to have a commission set with their buyer's agent, right?
Yeah.
And so a lot of people thought, well, sellers aren't going to have to pay commissions anymore.
Yeah.
But that's not true.
Yeah.
Actually, what we're seeing is sellers are still paying commissions.
Absolutely.
But they're just...
business is normal.
Business is normal.
Yeah.
Nothing has changed. What has really changed is that everything is just documented. Everything is
more transparent.
There's more
clear.
Transparency, right, into like what everybody's making.
Yeah.
And so, but pretty much all of our listings that we've sold and all the buyers that we're helping, sellers are paying commission still.
Yeah.
Are they negotiating a little bit here and there?
Absolutely.
Absolutely, yeah. Right?
And the reason why I bring that up, because I don't want that to scare off buyers, thinking that, hey, listen, I have this other cost, my down payment, my closing cost, plus this commission cost, right, this fee. So I think it's good that we bring that up and shed some light on it, that it's not... that it's still business as normal. Usually the sellers are, it's a little negotiation, but sellers are willing to compensate the buyer's agent.
Yeah. And what we're seeing people get creative now to make the deals happen, right? Like we've had deals where, we're representing the buyer, we submit an offer and we say, hey, we want the seller to pay all of our commission.
Yeah.
And the seller says, okay, as long as the price is at this price, because they're already factoring that into their net proceeds, right? So
exactly.
As long as you get me at least this price, we don't mind paying, a 2% or 2.5% or 3% commission. Yeah. We're seeing that happen all day.
And let me ask you, because you do a lot of training on listings now, and I know you've gone on a few listings. Now, when you're explaining this to a seller, hey, listen, do you show them a net sheet based on, hey, this is a net sheet if we were to offer a compensation to the buyer's agent, and this is a net sheet without? Right, so you can kind of show them side by side.
Yeah,
right?
We definitely do. I want to paint a realistic picture for sellers, right? So when I meet with the seller, I'm going to go over the numbers, right? Because it's one thing to like go over comps and say, hey, this is what your home can sell for, but you want to go into the net sheet and you want to see this is what you're going to walk away with, right? And you want to have an itemized breakdown of the fees, and that's what the net sheet is, right? So we have a cool app where we can punch in different scenarios. Hey, if your home sells for $1 million, this is our commission for representing you as a seller. If the buyer were to ask for a 2.5% commission,
there you go.
And then we pay off your debt, whatever you owe, and standard title fees and all that, this is how much you walk away with. Now, and then the seller can now determine, okay, does that allow me to move forward with my plans, right?
Yeah.
And some sellers say like, yeah, hey, as long as I get at least this and I walk away with this, I'm fine. I think everybody realizes that people have to get paid for services, right?
Yeah, and the reason why I bring it up during this market update is because I think it's important, right? Because we had the change August 17th. Fast forward to where we're at now, and I really want to shed some light that business as usual, right? And I think that's where maybe the consumer or some of the agents that maybe are not in production or high in production, where they don't realize that it's business as usual. The sellers are still willing to pay if it makes sense, financial sense. And the buyers don't have to worry about this other cost that they may have to incur, right? Because it's all negotiable.
Yeah, it's all negotiable. Now, here's the thing: this applies to buyers and sellers, right? Some things to consider. If you're a buyer, well, what can you do to maybe sweeten your deal?
Yeah.
Right. If you say, hey, I'm not going to ask the seller to pay commission, right? Then that obviously increases the seller's net proceeds, right? We have a deal right now that's being worked where it's above $6 million, right? And in that scenario, the buyer is actually going to pay the commission, right? Because they were competing with multiple offers. Think about that. In the $6 million price point, there's multiple offers still, right? And the buyer said, hey, we want to really win this property, so we'll pay the commission.
There you go.
Directly, and just give them, our offer, right? And that was the difference between getting their offer accepted.
That's good.
We've had some where the seller is willing to only pay like maybe 90% of the commission, right? And then the buyer says, okay, well, the other 10% that's due to the buyer agent, we'll pay that directly.
It becomes a closing cost.
It becomes a closing cost, right? And then they can work with the lender also.
There you go.
To cover some closing costs.
The lender can also give you a credit to cover those closing costs.
Exactly.
So there's different ways to kind of make it work, and I think that's why I like this market update, because we're going to give you stats, but also some fundamentals of what the market looks like in regards to how you can compensate the agent, but then also get the property you're looking for and negotiate some good terms.
Yeah, and I think what I like to say to both buyers and sellers is, at the end of the day, we want to see what's the net, right?
Yeah.
For sellers, what's the net that you're going to walk away with? For buyers, what's the net that you have to bring in?
Absolutely.
Right, as your down payment and your closing costs. Because that's really what matters, right? People care about, what am I walking away with, or what's due from me, and what's my payment going to be, right? Because those are the two main factors, right? Because now they can decide, okay, can I afford it?
Can I afford it? Yeah.
Can I make it happen?
And is it a comfortable monthly payment for me?
And so I even like to tell sellers, like when I'm meeting with them for a listing consultation, is let's not get too caught up on the what ifs, right?
There you go.
Because then that creates stress and worry, right? What we need to do is we need to make sure that your property is marketed correctly. We price it well.
Yeah.
We do the condition, it shows well. We do our home inspections and all that stuff so that we're prepared. We don't have no surprises. And then we have to see what comes in, and we're going to kind of cross
and work
those bridges.
with what we have.
And then that's where we come in and negotiate on your behalf, right?
And leverage what comes in.
Yeah, and we leverage what comes in. So for my sellers out there, the same rules that we always talk about hold true, right? There's 4 factors that really are going to affect what you walk away with.
There you go.
And that's the condition of the property, the marketing of the property, the pricing, right? Where you price it at.
It's extremely important.
And then having a really good agent that's going to come and negotiate on your behalf when those offers do come in, right? And so even in our listing presentation, we say, hey, we got to check the box on these 4 areas to have a really successful sale and get you the best result possible, right? And it's always going to be a case-by-case thing, right?
Yeah. That's good.
What's really cool though for our sellers is that we have, like, for condition, right? We have vendors that we work with, contractors, handyman, that we bring in to renovate the property, right? To help renovate the property.
And then the seller can pay that at the close of escrow.
Seller can pay that at the close of escrow.
Okay.
Right? Which for some sellers, that's a huge benefit, right?
Yeah.
Maybe they don't have the money, right, to spruce up the property. Yeah. But we're gonna take care of that for them. Now their sales price goes up, and now they get to pay that at the close of escrow, right? And so they end up walking away with more money than if they didn't do that. Yeah. Right. Okay, so let's talk about rates, right?
Yeah.
I mean, you're a licensed loan officer. You've been doing mortgages for a long time, which is the great thing about our partnership, is that you bring that to the table, right? What's been happening with the rates?
Yeah, I mean, just kind of staying in line with what you're showing here. So I have a scenario where we got a client of 7.5% in December. And now I am refinancing them into like 6.75. Okay. So that shows you, the rates have definitely came down. And so now if you're purchasing right now, we're seeing rates for probably between 6% to maybe 6.75 on a new purchase. If you're looking like for a government loan like FHA, VA, you can get your rate somewhere in the 5s.
Oh, wow.
And so the great thing is, like we were talking about negotiating, is that there's also buy downs where you can go ahead and buy down the rate. If you get a credit from the seller, you can use that credit to buy down the interest rate to get your rate somewhere. Let's say it's the base rate is 6.75. You can get it as low as 4.75.
Oh, wow.
Right. So this is definitely beneficial for clients that, want that early payment relief, and, maybe they anticipate for their income to increase over the next few years. This is a great way to go ahead and get into a property now, so that you can start building equity in the future.
Got it. So if I'm understanding you correctly, right, whatever the base rate is, then you could buy it down. So for those first few years, it's going to be at a reduced rate.
Yes,
right?
Yes, right.
And then it goes back to the base rate.
Absolutely, yeah. So it's right now. What I would say, if you're a buyer right now, is definitely meet with your loan officer. Run the numbers, because if you ran numbers maybe, let's say 2 months ago, those numbers have changed, right? So you may either qualify for more, or your monthly payment will be lower because the rates have came down.
Got it.
So definitely revisit with your loan officer. And if you purchased in 2024, definitely connect with your loan officer, because they can run some scenarios to see if it makes sense for you to refinance, which that's what we were pitching to all our clients in 2024. Hey, let's go ahead and get into a property right now. Yes, the rates may tend to be a little higher, but once rates drop, we can go ahead and see if we can refinance you and start saving you a couple $100 and lower that interest rate.
Yeah, and that's a good strategy, right? If like the rates are going to fluctuate over time, right? We don't think the rates are always going to be, higher, elevated, right? At some point, there is going to be a point where it goes low enough to where it makes sense for you to refinance. But as long as you can afford it now,
that's what I would say.
Right? Yeah. And if it goes lower, that's all gravy, right?
Benefit.
That's all.
Yeah, it's a huge benefit.
That's all savings on top
and you locked in the purchase price.
Yeah.
Right? Because a lot of times we get people saying, "Hey, well, I'm waiting for rates to drop."
Yeah.
Well, if you wait for rates to drop, that's okay. But you got to imagine prices are not dropping; prices are increasing.
Yeah.
So why don't you go ahead and take maybe the higher rate now and lock in that lower price, and then maybe in 6 months, a year from now, when rates do drop, then you go ahead and recover that lower rate.
Yeah.
Right? So you get the best of both worlds if you do that.
Because what you can't change is you can't change the purchase price, right?
You can change the rate, but not the purchase price.
You change the rate. You can't change the property taxes that are due because they're based off of your purchase price.
Those
are always going to go up, right? Yeah. So if you're able to get in now at a good price, when the rates do drop, typically what we see happen is prices start to go up even higher.
Yeah.
Because these buyers that were sitting on the sidelines, they come back out to take advantage of the low rates.
Yeah.
And then that pushes the property values up, right? And so I'd rather buy cheaper, right? And even if I have a higher rate, as long as I can afford the payment and it makes financial sense, and then refinance later, and I've probably got some equity in the home.
Absolutely.
Right?
And I like to keep it really simple when I'm talking with buyers. Because again, a lot of times when if you're just interested and you want to understand what you qualify for, there's a few questions that I ask. One is you have to understand what you're comfortable paying per month towards the mortgage. That's going to be a question that you have to ask you and your partner if you're buying on your own. Yeah. The second thing is, what are you comfortable parting with? What are you comfortable putting as a down payment and closing costs? Mm-hmm. Once you understand those two numbers, then your loan officer can solve for X being your purchase price or your purchasing power. Got it. Obviously, that's not getting you pre-approved, but it gives you a ballpark of when you are looking online or when you are talking with a real estate agent. Hey, listen, I'm comfortable with the $1.8 million purchase price. I spoke with my loan officer. We went over the payments and we went over the down payment. Yeah. Right. And it kind of speeds up that process so you can see and get a pulse of what's out there.
And now you're not shopping around blind, right? Yeah. Now you're not on Zillow looking at homes, favoriting these homes, and you don't even know if you qualify or you don't even know if that payment's going to make sense for you, right?
Exactly.
So you always want to at least talk to a loan officer, even if you don't submit your full application or run your credit or anything. Yeah. And you do that all the time, right?
All the time,
You run scenarios for them, right?
Yeah.
Yeah, and I think that's a huge benefit is, someone can call you and within 5 minutes you can tell them more or less the ballpark, right?
For sure.
And then if they want to look further, then they can obviously, get the application started.
And what I tend to find is that, there's one thing that what you qualify for, because the banks are pretty aggressive, right? They go up to 45, even 50% debt to income ratio.
Got it.
But what there's a difference between what you qualify for and what you're comfortable with, right? Because we still want to live. We still want to go out to eat, travel, take the kids out. And sometimes, but I do have some clients that want to stretch. They want to push their budget. But, majority of our clients, we want to find that comfortable payment. So that's why when I ask people, what are you comfortable allocating toward down payment and closing costs? And what are you comfortable paying per month? Then it's an easy math equation for your loan officer.
Yeah, that's a good point you bring up, right? Just because you qualify for $2 million doesn't mean we want to go for $2 million, right? That's going to come with a certain payment, with a certain lifestyle adjustment, depending on what your income is,
Exactly.
And so you rather have a comfortable payment, still be able to do
go
a
out
lot
to
of the things
eat,
you want to do,
travel, and whatever you tend to do. But I think and then sometimes we basically meet in the middle. You qualify for this, you're comfortable here. And then, you meet probably right in the middle of those two. And that's what I've seen. I mean, obviously I've been doing this for 22 years, but it's funny because, people really start with the low payment and then they see what they could buy. They're like, let me kind of push it up. And kind of meet somewhere in the middle of what you qualify for and what you're comfortable. It kind of hits right in there.
We tend to see people, once they start shopping, they start pushing the budget up a little bit, right? It goes up because then it starts becoming real. Once you look at homes and you're inside of them and you start seeing, okay, is this really the home that I want? Does it check my boxes? Or do I go down the street to this other home that's a little bit more? and now I don't have to remodel the kitchen or the backyard or whatever that might be, and it might be worth it, right, in the long run for them.
Quick story. I mean, it reminds me, that, when I first bought one of my houses, my budget was $500,000. Right?
Long time ago.
Long time ago, right? $500,000. And so my wife and I, my wife now, we're driving with my dad. This is back when we had the paper, it wasn't online, everything was printed out.
Yeah.
And so there's the property was up a street, but we didn't have the paperwork for it. So I'm like, no, that's not in our budget. We go look at the property, and my dad and my wife are like, come on, let's go take a look. So we look at the property, and I'm like, no, this ain't in our budget. There's no way. And sure enough, my wife and my dad, they loved the house, right? Yeah. They loved it. And then and I'm like, no, so the property was listed like at $650.
Ooh,
right?
So that's a bit higher than your budget.
$150,000 above my budget, right?
Yeah.
And so, we walk out, and my dad basically told me, hey, you know what, son, you're going to make this happen for you and your wife. So I ended up making it happen. But what I'm going with the story is that, like you said, once you're out there, you see what's out there. Your budget may change, but again, the starting point is see what you're comfortable with, see what you qualify for. Sometimes you hit right in the middle, or between those two. But be careful when you take your partner out there, because they will drive the budget up.
They will drive the price up. Right?
They will drive the price up.
Well, let me ask you this, right? Yeah. On camera, are you glad you made that stretch? Oh, absolutely. That house? That's the house you live in today, right?
Oh yeah, absolutely. Yeah.
Did it pay off in the long run?
Oh,
right?
Absolutely. Yeah, and it's neat because I was just on the phone with my dad earlier today. My dad has always kind of pushed me a little bit, right? And that was definitely a moment he pushed my budget from $500. And I ended up paying it more, $660 for the property, right?
Yeah.
So, it's...
And now you've lived there for a long time, gained a ton of equity. You've had memories there, right?
Yeah, we had some good times.
A lot of stuff there, yeah. So it definitely paid off, yeah. Okay, last thing I wanted to talk about really quick is some new services that we're adding into our arsenal, right? To the value that we bring to our clients. And so we recently partnered with a financial services firm, right, that offers different types of investment products, insurance products, and stuff like that. And I think the reason, why we look into things like this is I'm always trying to figure out, like, how do I give more value to my buyers and sellers, right? You see, from our own personal experience and stuff like that, that there are sometimes gaps in the services, right? We're meeting with people, we're helping them buy this big asset, but a lot of times people don't have insurance on their property. They don't have life insurance, right? Or we see a lot of scenarios where the husband's the breadwinner, and the wife maybe stays home with the kids. If something were to happen to the husband, and they just bought this $1.5 million home, they would be in a really bad situation, right? Or even situations where people are buying homes and unfortunately someone passes away and the home didn't have a will or a trust or anything set up. And now that home has to go through probate, and that's a whole nother ballgame, a whole nother
which is a
headache,
cost.
and a whole nother cost, right? And so part of the services that are offered through this partner that we have now is we can help our buyers get insurance to protect their asset, right, in case something were to happen. And then also they include a free will and a free trust.
Wow. Okay.
Which is awesome, right? Yeah. So, if you get the insurance product, right, it's very inexpensive. It covers you in case something happens. But the free will and free trust is really what I think makes the huge difference.
Because you're protecting your asset at that point, right? You're protecting your asset for your future heirs, right? For your family. I think that's important to definitely have that will, that trust, because like you said, we've seen it many times where they don't have that. It goes to probate, and it costs a lot of money through probate, and the family loses out ultimately for this asset that you worked hard for, and just by putting it in some protection would benefit the family in the long run.
Not only that, it does cause a lot of stress, right? Because when things aren't mapped out on how that homeowner wanted the home to be passed on to the heirs or whatever. And now you have a bunch of siblings trying to
cause some conflict.
It does cause conflict.
We've seen
that many times, right? Where our clients, even with family that we've helped, right? And it's unfortunate that, hey, if they would have just had a couple of these, financial things in place, right? It can avoid a lot of headache down the line, right? And so I think it's something that everyone should have, a will and a trust. Yeah. And they should have some form of protection in case anything were to happen to them in the form of, life insurance.
Yeah,
right?
and I like that, Enrique. I'm excited because I feel that, we're always growing, right? We're always trying to, like you said, we're trying to add value to our clients. And I think this is a huge value. You know, we do the real estate, we do the finances, you know, we help people remodel their property. So I think this is the next piece to go ahead and help them protect their most valuable asset.
Yeah.
And I'm really excited about having this product because I think it can benefit a lot of families. And it's not too complicated, right?
It's pretty easy.
That's what I was going to go with. It's pretty. You meet with the licensed agent. They'll kind of put it together for you, make sure you're good with it, and they send it over to the attorney, get some documents signed. So it's I think it's a great product to add to what we're already doing
to our wheelhouse. What the stuff we already do, right? We're already sitting down looking at people's biggest financial decisions,
Absolutely.
right? And so that's coming down the line, right? So if anybody out there watching that, hey, I want to know more about this, you know, reach out, we'll connect you.
Yeah.
Right. And even if you don't end up using, you know, our partner, that's totally fine.
Just be aware of it.
But if it gets you now aware, and then you go choose, you know, whoever you want to choose to work with, and now you end up setting that up for yourself, like to me, that's a win as well.
Absolutely.
Right. And so I like it from that perspective. The other component to this, and what's exciting, is that we meet with a lot of sellers that don't want to sell their home, or they want to sell their home, but they can't really sell their home because they're going to face a huge tax implication.
Oh yeah, the capital
in the
gains.
form of capital gains, right? They bought their home for $50,000 40 years ago. Now it's worth $2 million, and if they sell this property, right, even with some of the exclusions for being married and all that stuff, we won't get too much into tax law, right?
Yeah.
But they're going to end up paying a hefty amount to Uncle Sam.
Yeah.
Right. And so what's cool is that some of these partners that we have, they have some creative ways, right, to help you either defer some of the capital gains, or even, you know, avoid them or defer them and reinvest them into something else. Right. So there's a lot of different solutions that they have. And so I think that it's just going to open up more value for, you know, these sellers that we're talking to. Because at some point in people's lives, there are a point where they got to sell, right?
Yeah.
They got to downsize, they want to retire, they want to move out of state, or maybe they own rental property, right?
Yeah.
And they don't no longer want to be a landlord, or their kids don't want to take it over, you know, either, right?
Yeah. But they want to protect themselves from the capital gains or paying the taxes or defer the taxes.
Exactly. And so they deal with you know, primary residences, they deal with investment properties. There's different creative options that they do for 1031 exchanges and stuff like that.
Yeah.
And so it's just a whole, you know, bunch of different products that's going to be a case by case scenario. But now we have a partnership with them, right?
Yeah.
And so if we see those opportunities for some of our clients, we can now connect them and get them that information that they need.
Absolutely.
Right?
Yeah.
And so we're excited about those things because I think, you know, like you said earlier, as we've been in this business for, you know, 20 plus years now, how do we continue to improve what we offer, right? How do we continue to give more value to our clients, right? Besides just helping them buy and sell real estate, it's connecting them with the right vendors.
Which is our bread and butter, right? Is the real estate. But I think, again, we can be a beacon for them to go ahead and protect it, and just and it's you know, they've already trusted us to help them with the purchase, so we can recommend someone to help them protect it as well.
Exactly. So, guys, that's your market update, right? Spring 2025. A lot has happened in these past months. But I think what we got to remember is that if you're thinking of buying and selling, right, or you need financing help, always consult with someone, right? And that's the thing that we're here to offer. If you need just information, you want to run scenarios by us, you want to know information on a specific market, you want to know what you'd walk away with if you were considering selling your home, that's all information that we could provide for free. No obligation, anything like that. Sometimes it's just a quick 5-10 minute conversation over the phone.
A quick Zoom phone call. We don't run credit. You know, we don't need to go to the house. We make it as simple as possible so that you're 100% comfortable.
And then from there you can decide, okay, it makes sense to, you know,
the next step,
right? But it's just getting the right information that points you in the right direction.
Yeah.
And if we could be of service, reach out to us. We'll see you guys soon.